A very good evening. Welcome to how to safely build your first 100K stock portfolio. So this will be a very special evening. It will be a live fire chat with a very special guest of mine, Samuel Tay. He's also a diligence member and also a Build Your Monster Dividend portfolio student as well. He joined me last year. So we were going to have a very special evening. Now, for this webinar, last year I did one special webinar similar to this as well. And one thing which is interesting, the twist for such a webinar, usually what I do is I tend to do something different. So last year, what I did was I handpicked one of our readers' portfolio and I did a live portfolio review. So it was really interesting. Last year, we had a reader who had just above $200,000 portfolio, and I did a portfolio analysis, a full review in front of hundreds of attendees last year. So this year, how to safely build your first 100K stock portfolio. I know there are many readers out there who are interested to start building their portfolio to start dividend investing, but not very sure how to do it. At the same time, also want to get their feet wet amidst all this, market uncertainty, volatility, and the tariffs as well. So tonight, I'm going to do a fireside chat instead with everyone with my special guest. So how this going to work is, we'll have a very simple conversation with my special guest, and then after that, we'll move on to the Q&A. So if you have any questions, feel free to type it in the Q&A box. Please do it in the Q&A box so that I can collect all the questions and we can answer them after the fireside chat. All right. And if you have any questions, your burning questions, feel free to go ahead. All right. So just a short introduction on myself. My name is Willie King, and I am the founder and writer of a financial blog called dividendtitan.com. I've been writing the financial blog for a couple of years now. I started since 2020. Today, I invest full time. I also write my blog full time as well. So it has been a really interesting journey. I get to meet really exciting, events, interesting people like Samuel. Samuel is also a close buddy of mine. And tonight, spotlight will be on my special guest. Now, Samuel, very interesting. He has a very interesting story, right? Like myself, he also quit his job. He took a career break, and he shares his investing journey on a blog called Financial Pilgrim. So if you have a chance, please check out his site. He also posts very frequently on Instagram on his personal finance journey, on his investing journey, and has built a six figures dividend portfolio, investing across US, China, Hong Kong, and Singapore. So since then, he's consistently grown his passive income. I will share more. I'll let him share more on his investing journey. But first, shall we introduce Samuel into this fire chat tonight? A very warm welcome to Samuel. Hello, Samuel. Good to see you.
Hi. Okay. Hi everyone. If you can hear me, okay, maybe just also type one so that yeah, I can know that the audio is working. Okay, cool. Yeah, so thanks Willie. Yeah,
All right.
really excited to be here. Yeah, just to share a little bit of my journey. So I think like Willie mentioned, I'm actually on my career break. So I was in the education space, for a number of years. Yeah, and I decided to actually take a break after that. So I think that was during the COVID period, and I actually chanced upon this whole journey of delving into personal finance, and then subsequently investing. Yeah, because I think on when you're on a break, then your finances are tight lah. So you need to find ways to do a little bit of like either optimization, or you try to figure out how to make your dollar stretch a little bit more. So I think it was during that whole process that I got introduced to the world of finance, and I decided to just dive in and learn as much as I can. Yeah, so I think over the years my investing journey has been quite interesting. It has sort of evolved, yeah, over the years. So I think I started out, I think like many of us, just as I was starting out, trying to get a sense of the market, trying out, different strategies, and yeah, had a lot of humbling lessons as well. Yeah, so I think as of now, I actually decided that I wanna lean on this what I call more of a dividend investing, which is basically, I think what Willie and his community does as well. So yeah, it's been a great journey of learning so far over the years.
Maybe Samuel, you can just share with us what before you took your career break, what were you doing? And then share with us a bit more about your sabbatical. And then I'm very interested in your strategy because you did mention about dividend investing strategy, and this is something which we in dividendtitan.com we have been doing this as well. But I also want to know your transformation. So first, maybe just share with us your what were you doing previously, and
Hmm.
then a little bit more about your current where you're at this point.
Yeah, so I used to teach in a local secondary school here in Singapore. Yeah, and I sort of left actually I would say the first round when I left it was not really planned. Yeah, so I think I was quite burnt out, so I just left to take a break. Yeah, and then that's I think where I mentioned just now. So I stumbled upon investing. Then I think subsequently I went back to school, but it was in a non-teaching kind of a role. So just helping to do a bit of coordination for some of the after school programs. Yeah, and I think subsequently I was thinking about even in terms of like personally the growth that I was there, and I felt like it was getting a little bit stagnant. So that's why I decided to just take a break. But of course, thankfully, having done it once, I think the second round I'm a little bit more prepared. Yeah, so I started saving up, and I think also it was very timely that I think about 1-2 years ago I started to sort of build this dividend portfolio, so that allowed me to have some passive income. Yeah, I think it helps also in terms of psychologically, when you want to make the leap to take a break. So even though you have something saved up, but if you know that you have an, let's say, some alternative source of income, it also, I think it sort of gives me a little bit more assurance. Yeah, so I think so far that's my journey. I think currently during the break I have been trying different things. I've been traveling a bit, have been also meeting new people. Yeah, trying to learn about different journeys, different perspectives. Yeah, so I think that has been interesting, and I think that there are also different opportunities. Like I think what I'm actually doing now is my first time actually. So getting opportunities to share, to teach. Yeah, I think that's been very exciting so far. Mm.
Samuel, you mentioned earlier that you started dividend investing 1 to 2 years ago. Was dividend investing your first strategy?
Yeah, so I think when I first started in 2020, I was I mean, looking back now, okay, I think I wouldn't really call it investing. I think I was more of a speculating.
Spec-
Yeah, so I think when I started out, I ran a very highly concentrated portfolio.
Hmm.
Yeah, because I think for myself, I think when I first got exposed, I think I had that sudden excitement, right? It's like, wow, I think this investing thing is very exciting, and then I think during COVID, many people also jump on that bandwagon, right? And of course the market crashed, but I think subsequently we saw like a huge rebound, right? So, back then if you ran I mean, if I ran a very concentrated portfolio, and like, wow, the gains were like phenomenal. Like some stocks end of year they doubled, for example, and then yeah, so I guess that made me sort of feel like, wow, like it's so easy to make money in the stock market, right? Yeah. So I think after that, I think the reckoning came in 2022. Yeah.
Hmm.
And I think we saw towards the end of 2021, I think when the interest rates started to go up, then I think a lot of the growth stocks, right, in the US side of things, they started to experience a sharp decline. Yeah, so I think that was also when my portfolio was affected. So I think it
Hmm.
was down. Yeah, I think probably at one point, probably 60-70% down. So it was a very tough period for me to see like the portfolio draw down so much. Yeah, so I think it got to a point where I was actually quite demoralized. Yeah, I remember there was a period of time and I was just thinking to myself, should I just give it up altogether, not too sure whether this investing thing actually works anymore. Yeah, so I think after that, after some months, I just decided to okay, calm myself down, and I think I started to just read a little bit more and learn a bit more. So I think there was a couple of months where I was just like silent. I didn't like add anything to my portfolio. I didn't buy or sell anything. I was just in that state of trying to reflect and trying to see lah how I can actually move on. Yeah, so only after that, I believe I think it was maybe two or 2+ years ago. I think I chanced upon your blog, yeah, and then started to read, and then also tried to watch some of the like interviews that you did. Yeah, and I thought, okay, maybe I this seems like something that I could possibly try out. So what I actually did was I sold off most of the previous portfolio. Yeah, so I just salvaged whatever I had, and then I just restarted everything. I think that was around end 2022.
Wow.
Yeah.
And you mentioned, I'm just curious here, Samuel, because
Yeah.
you did mention about running a concentrated portfolio, but I had never asked you like your the number, like the concentration you had in your portfolio. Like, would you mind like sharing with everyone, when you say concentrated portfolio, what do you mean by concentrated? Because for me, I did share through my, with readers, I did run a one stock portfolio before and it was terrible. And I also did like a couple of stocks as well. And that was a concentrated portfolio. Now I just want to find like, when we talk about concentrated, how many stocks do you have back then? And also maybe, could you give us like one example on, maybe just one or two stocks which you actually looked into back then, which didn't really turn out well,
Mm,
when you started investing?
yeah. So I think when I mean concentrated, I think I ran about 4 to 5. Yeah, 4 to 5 stocks. Yeah, so yeah, that was I mean on hindsight, I think it's really not for the faint-hearted lah to do that. Yeah. Yeah. So I think not sure whether some of you are familiar with this stock. It's called C Limited, right? So they are the parent company of Shopee, Garena, and then they have this digital finance arm called C Money also. So I think if you look at the trajectory, I think in 2020 it was just going up all the way, right? So I think when you invest in something like that, then you feel like wow, you can really ride out, yeah, the wave and all that. Yeah, but I think subsequently we all know what happened. I think in 2022, yeah, so I think then the stock got hit very, very badly. Yeah, so I think it dropped probably more than 80%. I think at one point it was down like almost 80% from its high.
Mm.
Yeah, so that was obviously very painful lah to look at, because you will think to yourself, oh, if only I had sold right at the top, but then nobody would have known, right, that yeah, there was going to be like such a huge decline yeah, coming into the story, into the picture actually.
So you mentioned that there was a huge sell-off and drawdown on the portfolio which you were running back then.
Yep.
I it must have been really painful because I also had that experience before much earlier on. When I started my investing journey. How do you pluck up the courage to restart again? Because most people would say, okay, I lost money, I'm going to stop, I'm going to just give up, I'm not going to invest anymore. But for you, it seems like it's a different story because you did mention, right? You sort of went quiet for a while, but it seems like you sort of quickly picked yourself up and you sort of moved on. Like, what gave you that courage, and what motivated you to sort of, hey, I need to push forward this.
I think that's a very good question. So I think for me, during that period where I was like silent, um it was a lot of reflection, on myself. And obviously I also was thinking about like, what how I actually built like that previous portfolio. Yeah, and I also spoke to, a couple of people and tried to understand like their perspectives. Yeah, so I think for me, probably it was I think on hindsight lah, it was a blessing, because I didn't totally give up. I sort of realized that that wasn't really the way to go. Yeah, but
Mm,
I did not lose faith like altogether. Even though I think there was one point in time, I was just very tempted to, just dollar cost average, yeah, into an index, let's say S&P 500, and then, I mean, nothing wrong with that, yeah, but I think there was the point in time I was just very tempted to do that, and then just like hands off, yeah, and just let go of that. Yeah, but I feel like after that, right, I was just thinking to myself, and I had this thought that, I mean, if I made a mistake, right? Obviously, which I did because I was thinking that I could run, something so concentrated without, really doing a lot of proper research. Um, yeah, I mean, could there be, another way of doing things actually that is a little bit more stable,
Mm.
and a little bit more safe? Yeah. So I was actually torn with that question. I mean, I didn't have a immediate answer lah. Yeah. So I think it was only some months later, where I just decided, okay, let's just give this a go, one more time. All right. Because obviously what I did wasn't very correct, but I think somehow I was convinced that there had to be a better way to do this.
Mm.
Yeah. So I guess that was how I just somehow slowly picked myself up. And yeah, I decided to, yeah, give dividend investing a try lah. So that was when I sort of restructured my entire portfolio at the end of 2022.
Just a quick one, right? You mentioned about in dividend investing and also dollar cost averaging into, let's say, the index. Um,
Mm,
any reason why you decide, okay, dividend investing, but
mm,
maybe not so much on DCAing into the S&P 500? Um, I mean, I'm getting some questions, but I'd like to, since you brought up this point, and I think there's someone asking about what made you decide to focus on dividend investing versus accumulating in the S&P 500, for instance.
mm,
So,
yeah. So, okay, so I think, right, for, S&P 500, I think dollar cost averaging, right? I mean, if you are someone who's starting out,
mm,
I think that's a decent strategy, right? Because it's, you can set it, and then every month you just automate it, right? So I think for me, probably because I was actually quite interested still, to really look into companies.
mm,
Yeah, so I think number one was, I think I had that interest. So I didn't mind, a little bit of monitoring here, and trying to understand lah what the company is doing and all that. Yeah, so I guess that was one of the reasons why I did not go with the index, because I guess if you go with the index, definitely it will take probably much less time, right? You don't really have to do any kind of research. You just buy in every month. So I think that's a very hands-off approach, and definitely workable, for some people who either, have no interest in looking at companies, or they just want a very hands-off way to grow their
mm,
wealth. So I think that's still a okay strategy lah. I mean, at least you are invested, yeah, you're not just putting all your money in the bank. Yeah. So I hope that helps to answer a little bit of that part.
mm. Now, moving on, right, mention about dividend strategy. You decide to pick up dividend strategy.
Yeah.
How do you start going about um, dividend investing itself, and how do you start building your passive income? Like, could you walk us through this portion? I'm pretty sure a lot of us are very interested to know, especially for beginners who want to get started. Getting their feet wet into investing. You have some money, and you want to start investing, but you do not know how to go about doing it. Like, how do you transition into the
Mm.
strategy? How do you approach it, and how do you start building that passive income?
Yeah, so I think I guess as with all things, usually you tend to start with something that you're familiar with, right? So I think for
Mm,
myself, I started with Singapore market. Um, so if you do a little bit of reading and talk to some people, you realize that I think for Singapore, I mean, we are very blessed, right? That dividend income is not taxed. That's one. Yeah, and I think that a lot of people will tell you that, you can start with, let's say, the local banks, okay,
mm,
and probably some of the REITs. So I think that was actually how I sort of started. Yeah, building that portfolio. So if I remember correctly, I probably bought into, some of the retail REITs, because I think that was something that was easy to understand, yeah, something familiar. Yeah, so I think from there I think I bought, you know, my first stock, and then after that tracked the dividends for a while. And then slowly I guess as I learned more, I added to the portfolio, and I also started to have more exposure in other countries. For example, US, and then subsequently Hong Kong. So that was how I sort of slowly tried to build up the portfolio.
Can you just share with us, when you start building, right? What sort of pros and cons, the benefits or the cons of dividend investing which you have come across? Maybe you can just share with us, over the last 1 or 2 years on,
Mm.
your experience so far.
Yeah. So I think for myself, it's been quite interesting. I actually heard of, I mean, I knew of dividend investing, I think maybe a couple of years ago. Yeah, but I think I always I sort of dismissed it lah, right? Because my thought back then was that, oh, you know, if I only have such a small capital, right, and then I start to do, you know, dividend investing, yeah, I mean, I can get dividends, but the amount is not very substantial, right? So yeah, why don't I have a more of like a growth kind of a, you know, strategy, and then I think after that you can sort of switch over, right? I think that's what we
Mm,
hear a lot of people saying. Yeah, but I think for one, I think dividend investing, it has helped me a couple of ways. So I think one thing is that when you do dividend investing, right, when you pick very good companies that pay, you know, consistent dividends, and let's say some of them even grow their dividends over the years, I think what happens is that you realize that even in, let's say, a market crisis, or even let's say during these times when it's quite volatile, right,
mm,
there's usually um a limit to how far, you know, the price can actually fall, because when the price falls, you know, and then the yield subsequently goes up, right, there comes a point where, you know, it starts to get very attractive, right, and then
mm,
people will come and buy in, support the price, you know. So in that sense, you have some kind of a floor. You know, it's not like, you know, like your growth stock, it can crash like, what, 50, 70%, right, if it's really very bad. Yeah, so that actually helped me in terms of like managing that volatility, you know, and also yeah, just trying to look at the whole portfolio and not have such a huge kind of fluctuation. I think psychologically it just helps me a little bit better.
mm. And speaking of like market volatility, I mean here we have experienced the tariffs recently, for the start of this year, you have the post-tariff sell-off, markets become very volatile. Like, how do you manage your emotions? How do you manage your portfolio in this sort of very volatile climate, especially when, coming from the point of view from dividend investing?
Hmm. So I feel like this is probably something that maybe I can be a little bit better, because I have gone through, I think a 2020 crash, and 2022 also, which was
Mm,
very long drawn. Yeah, because I feel like having gone through those crashes, you sort of realize that um yes, the market can be very volatile, you know, and prices can, you know, keep going down, right? But eventually, you know, there is always I mean, the market always recovers, right? So I think it's important that because I have those experiences, so if let's say you are, you know, if you're someone new who's starting out, I think it's perfectly normal to be, you know, like very afraid. Yeah, when you look at the volatility, because I think that was what I experienced. Yeah, but I
mm,
think this time round, because I've experienced that, then I was sort of able to handle it a bit more calmly. So I started to ask myself questions lah when I saw, like, you know, the price going down. So like for example, right, I think was it last week or something, then I saw, I mean, there was a very I think after the announcement of tariffs, and then yeah, I think the price just went down, and then some of the REITs were really like reaching the COVID lows, right? So I just took a step back, and then I just asked myself, right, I mean, okay, they are at the COVID lows, and of course this tariff thing is bad, right? You know, it's gonna slow the economy and everything, right? But are we at the place where the whole world is like, you know, gonna shut down or end? because that
Mm.
was sentiment back in COVID, right?
Yeah,
Yeah, but
exactly.
yeah, exactly, right. But yeah, so I mean, yes, it's bad with all the tariffs, but I don't think we are at a stage where everything is gonna shut down, or at least not yet, right? So I just felt like okay, the price just didn't make sense. So
Mm.
that was when I told myself, okay, just take a step back. Yeah, I mean, this too shall pass, right? So, and true enough, right? Of course, we don't know that, he will actually pause and all that. But yeah, subsequently, when that happened, of course, there was a huge rebound, right? So I think it was more of sometimes taking a step back and asking yourself, like, is the current sentiment, really, like, is it warranted or is it really a very big overreaction?
Right.
So, yeah, so I think when I try to look at it from that perspective, yeah, I was able to be, yeah, a little bit calmer. Yeah, but again, like I said, I think it's also because I've gone through like the past two crashes. So that
Mm.
also gave me a little bit of experience to handle that lah.
Mm. Okay, for those who have just joined us in our fireside chat with Samuel, if you have any questions, please feel free to type it in the question and answer chat. I'll try to answer them as we go along, but we'll leave most of the questions towards the end, um, after this, after the conversation. So, do you have any burning questions? Just feel free to type in the chat. At the same time, I know some of you have asked about the recording, so this will be recorded for a limited time here. I will post the recording after this evening. So if you have just came in late or you have just joined us, you have missed the session earlier, do not worry. The recording will be made available to you after tonight. Samuel, speaking about during the market volatility, right? Like how so I'm just quite curious as well. Like, were you surprised, like when you start to see the market sell off, and then looking at your portfolio, like what was your reaction, and how do you, how else do you sort of overcome, like overcome that kind of fear which we all have. Sometimes we are just scared. And how do you stop yourself from panic selling the stocks in your portfolio?
Hmm. So I think for me, it was more of I think having a diversified portfolio really helps because I think it helps to, I think number one is sort of helps to reduce that volatility.
Mm,
Um, yeah, so of course when the price goes down, right? I mean, yeah, so quickly. I mean, yeah, it can be scary. So I also felt those emotions. Um, but I mean, I always know that okay, if this portfolio that I've built, right, is like what I have intention it to be like, okay, well diversified, across different sectors and companies. I think it's really about taking a step back and asking myself, even with this sudden drop in the price, has the fundamentals of the company really changed that much?
mm,
Yeah. So I feel like if you are able to invest in sound companies and you know that actually the fundamentals did not change like overnight, uh then I think that for me helped, yeah, helped to sort of calm my nerves and don't panic sell because I think the last thing you want to do is to sell and then subsequently if something just changes, yeah, and the price shoots back up, then I think that is something that we all do not want. So yeah, so I think that is how I try to do it. But I really would say that it's really because it's not the first time
mm.
that I've seen the volatility. So I think this time round I was actually trying to ask myself how else could I mean especially maybe in the last 2 weeks, yeah, how do I even find more capital to to put inside lah. So it was a more of a different kind of a perspective this time round.
I see. And like, could you share with us, like during this volatility, how has your portfolio performance or drawdown, like, so far? Like,
Yeah.
yeah.
Yeah, okay, so maybe I have a, yeah, I want to show this chart. Let me just hang on, let me
Mm.
just share my screen. Okay, a second. Yeah, I totally forgot about this, but okay, I hope everyone, can you see my screen?
Yeah.
Okay, so let me just go to the end. Okay, so I'm just gonna show everyone like this is my actual portfolio and what happened in the last 2 weeks, which is the first 2 weeks of April. Yeah, so I think obviously we all know like in the middle of the week, right? I think Trump announced about the reciprocal tariffs, and then subsequently on Thursday and Friday, I think there was a very huge drawdown. So I think I put it here. Yeah. So I think S&P drew down over almost 10% over 2 days. But you can see, right, for my portfolio, because I think I've tried to diversify it well. I think overall drawdown was about 2+%.
Mm.
So this actually also taught me quite an interesting lesson, because I used to think that, oh, if you let's say just buy S&P, or even let's say you buy like a world index which is like super diversified, but it doesn't mean that if you are very diversified, right, you are spared from huge drawdowns, right? Because you also, when you buy S&P, yes, of course you are very diversified, but I think you hold the winners, you also hold the losers, right? So it's sort of like still can make it very volatile. Yeah, so I realized that, oh, actually it's not really about just buying the index, although that might work if you want a very hands-off approach and you are okay to take the volatility. Yeah, but I had this interesting observation that if you craft a well diversified portfolio, right, you realize that the drawdown can be less than the index. Yeah, so I think the other example was on the 7th.
Mm.
I think this was a day where STI was down 7%, and Hang Seng Index, which is the Hong Kong index, is actually down 13%, which is, if you think about it, is quite scary lah for index. Yeah. So my portfolio was down like almost 5%, which, I mean, okay, I guess because I've uh experienced like huge drawdowns last time, right, in my concentrated portfolio. So I was quite unfazed lah by a 4-5% drawdown in a single day. But I think my point here is that there's a lot of value in building a diversified portfolio that
Mm.
can help you to sort of weather through this volatility. Yeah.
And you mentioned, I mean, thanks for sharing this, Samuel. I mean, I also shared this with diligence members also on my portfolio as well, where the drawdown was actually much lesser than the overall index. So it seems, this is something where there's some resiliency when it comes to building a dividend portfolio. I'm just curious, Samuel, like you talk about diversified concentrated portfolio back then, you mentioned 4 to 5 stocks. How has this changed when it comes to diversification?
Yeah. So I think for diversification, I think of course they are the usual. You want to be diversified, I think, across different countries, right? So not
Mm.
just Singapore. So I also invest in US and Hong Kong and China.
Mm.
And I think also across different sectors.
Yep.
Yeah. So it can be in the REIT space, can be in the financials. I still have some tech from US, some consumer stocks as well. So yeah. Recently, I think I also started looking like into the healthcare. Yeah, just trying to see whether I could try to add something into the mix. Yeah, but I think it's trying to understand that there are different market cycles for the different types of stocks. So when they move in different cycles, then some of it actually will even out lah. And I guess that's why you see like some of the volatility here is actually reduced. Mm.
Roughly, like if you're able to share, like how many stocks do you have in your portfolio, and roughly like if you can share with us, if possible, like a sector breakdown. I'm sure like people are curious, okay, because I do get questions on,
Mhm.
okay, really, how do you diversify your portfolio? How many sectors? Like how do you allocate like your money to your REITs, to financials? Is it possible to share some of this?
Yeah, I mean, I think it's fine. I can share, but I guess of course, like my sector breakdown may not be what is suitable, right? Yeah, for
Mm.
someone else. So I think you have to find something that you are comfortable with. So personally for me, I think I'm quite heavy in REITs, because I
Mm.
think that's just something that especially in Singapore, because something that I am familiar with. And yeah, I think it's a little bit easier to track because it's in the local space. So I think almost 40% is in the REITs, yeah,
Mm.
currently. Maybe another 25% is in financial. So you have the banks here, the banks in Hong Kong. I think about 15% is in US tech. Yeah, and then maybe another 15% is like in consumer kind of stocks. Then yeah, the rest about 5 to 10% is like miscellaneous lah. So I think these are the main categories, yeah, that I have. Yeah, but
Having
but
built
again, I think it's yeah, it's really dependent on how it's not like a magic formula or what lah. So it really depends on how comfortable you are holding each kind of stock in your portfolio. Mm.
having been built your portfolio, experiencing the drawdown, like what do you think about this tariff situation? I know it has been uncertain, and people are also asking about it. Do you see this tariff? How long more do you think this tariff is going to carry on? And on top of that, like, are you afraid that this tariff will impact heavily on your portfolio?
Mm. Yeah, very good questions. Actually, I have no idea like how long the tariff will be because I think it's just very difficult to predict what Donald Trump is gonna do. Yeah. Yeah, so I mean, yeah, that's my honest answer. But of course, feel free to share your insights. I'm sure you also have some insights as
Mm,
well. I think more on the point where, whether it will affect my portfolio, I think probably that's a more like I think question that a lot of people are also wondering about, right? Mm, okay, I guess at this point in time, I'm not too concerned so far. I feel like there's always a crisis lah, and there's always many reasons to sell down the portfolio. Yeah,
mm.
but I feel like if you believe in like the adaptability of humankind to bounce back, and to continue to grow and all right. Yeah, I suppose in the long run, the portfolio will eventually recover if you have built it well from the ground up. But of course, I think having said that, sometimes we also have to be prepared that the drawdowns can be longer, right, than expected, right? Let's say in the 2022 bear market, right? So it can be 1 year, it can be 2 years even. So I think it's important to know that you need to have your own spare cash or liquid cash on hand.
Mm.
So I think when you have that, right, some people call it like emergency funds, or some people just call it like you have that liquid cash buffer. I think it helps you to not panic sell. Yeah,
Mm.
because you know that, oh, I do not have to liquidate my portfolio for my daily expenses, right? So I think that is something else that yeah, people may not talk about often, but I think it's important that to have a healthy cash reserve so that you are able to, let's say even if we go into a bear market, right? You are able to ride it out even if it's 1 year, 2 years. Yeah. So I think that's important. Hmm.
I have a question from Sarah. I think this is quite relatable, and I want to follow up her question on what we're discussing now. So you mentioned about different market cycles. Can you elaborate more, like how much time do you spend monitoring and reallocating your portfolio during this period of time?
Hmm. So I think, right, during this period, I think because I do see like the sudden volatility. So in fact, I'm a little bit more active in terms of looking at whether I'm able to, maybe add on to some of the positions which are a little bit more underweight. So I think yes, I think during this time it's a bit more active,
Mm,
but by and large, I think usually when I buy in, I don't I just yeah, usually I just leave it there, right? And I don't really do a lot of so-called rebalancing because yeah, I mean I feel like I can't really time like the highs and the lows. So I guess for me, if I feel that I bought in at a good price, I will usually just leave it there to grow and yeah, just to let the dividends come in. I don't spend a lot of time to rebalance the portfolio. Mm.
could you share with us like how has your dividend income or your passive income sort of grown ever since you started this investing strategy, started dividend investing?
Mm. So I think it's been quite interesting. I think the I was just looking at I think the last couple of years. Yeah. So I think I started in end 2022, right? So that year, of course, it was very little. I think I had like maybe less than $100. Yeah. So after that, I think the amount slowly picked up because I think back when I was still in my job, then I was still able to contribute lah every month, to pour into the portfolio.
Mm,
Yeah, so I think subsequently, I think the following year, it was probably around 1.6 or 1.7 thousand.
mm,
Yeah, 1.6 or 1.7 K. And I think last year, I think it crossed slightly over $4,000. Yeah,
mm.
so I think that has been quite interesting to see and to monitor. So this year, I think so far, of course, I'm not able to put in as much, but I think by end of the year, probably will still be on track to hit the 6K mark. So I think that's a very nice number for me because it evens out to about $500 a month. I think,
Oh,
yeah, I mean, it's you can't retire on that, but I think it can help you to, maybe with some of your expenses, and gives you a little bit of space to work with. Yeah, if you're a little bit tighter lah. So yeah, I mean, looking forward to track like how that will grow over the years.
yeah, especially I mean, this is great, especially if you want to take a sabbatical or just a 1, 2 years break. This is perfect to sort of help to support your expenses, and at the same time, also it helps you to this income is not going to go away because it's just going to just keep growing, right? And I guess like from what you said, it will sort of continue to grow, and yeah, probably looking forward to more of this dividend income, especially now when REITs they are going to start paying out their payouts really soon as well.
Yes, yes.
So, like, I'm just curious, like, Samuel, like, you have built this portfolio, and it's only just you just started this only like 2 years ago, right? And you've
Yeah.
already sort of grown to a couple of $1,000s for your dividend income, and and this is going to continue growing as well. I just want to just shift the attention a bit. How does building this portfolio how does taking a sabbatical, feels like right now with a portfolio by your side? Can you just share that with us? And what have you learned
Mhm.
so far? Because you mentioned I've been reading your blog, I've been reading your IG as well, and since last year you started taking your break, you started to travel. So how does it really feel like to have that being able to take that leap of faith to quit? Because most people, they tend to have that fear. Just share with us like that whole journey, like that whole process of taking that career break, and how does it really feel like?
Mm. Yeah, so I think this journey has been very interesting. I think when I wanted to take my break, of course, I mean there were a lot of questions like the usual, right? Because I think nowadays you always think that you always okay, if you take a break, will it be how easy or how difficult is one, right? Will it be to, let's say, get back into the workforce?
Mm,
And then of course definitely money, finance is a very practical consideration. Yeah. So I guess for me, I would say that I tried to have a few layers of buffer for myself in terms of the planning. Yeah. And I think for the dividend income, I try not to touch it. Yeah. So I still have like some part-time gigs here and there. Of course, I have saved up also previously before taking my break. Yeah,
mm,
so that has helped me. I think the dividend portfolio has helped me psychologically in terms of like, okay, if I really, really need to draw down on the dividends, I have that option, right? It's there like as a last resort. Yeah, so I think psychologically that has helped. Yeah, and I think so far, on this break, it's really been about exploring, trying to figure out also, what are some of the things that I like, um, trying out, different gigs that I was not able to previously. Yeah, when I was, in a 9 to 5 in a job. So I think it's been very interesting. I think it taught me about how important it is to really have a life like outside of work. Yeah,
mm,
you want to not just let work like consume you like all the way, but you also want to try and understand, okay, what are your hobbies, what are your interests, and you know, take some time to explore them. Yeah, because eventually I think one day when all of us like stop full-time work, then of course money is one, but I think that identity, and what are you gonna do with your life, and like what's the purpose? I think that's gonna be something that is gonna be important.
Mm,
Uh, yeah, and I think taking a break allows you to like test drive, like some of these things. Yeah, currently.
mm.
I hope that makes sense.
Yeah. All right. Maybe just one more question. Before we open up to our Q&A, Samuel. Any advice to investors beginner investors or people who want to get started investing? Any advice, for these for these investors who want to get started investing?
Yeah, I think if you are like totally new to the stock market and you wanna start somewhere, I think find something that you're comfortable with, right? And dip your toes in, right? Yeah, you can put in, yeah, just $100, $200 just to try out. So let's say if you wanna even if you wanna start with an index, I think it's fine. Put in a few $100, then I think just leave it there, and then let see how you respond to the market fluctuations, because I think you
Mm,
want to slowly ease in and get a sense of how like the market is like, right? So I think many people always say like, okay, of course it's very good to start investing early, right? And then okay, they always say like, okay, the best time to invest was yesterday, right? The next best time is today, which is fair, but I feel like if you even when if you are new and you start, you don't have to like go all in, right? Because I think the last thing that you want is to, let's say if you use myself as an example, if you go in like big and then at the start, you make a lot of mistakes, that could severely affect like your confidence. Yeah.
mm,
It almost did for mine, right? So I think it's okay to ease in slowly, get a little bit of exposure, and then yeah, just see how you feel, with the market fluctuations. Then maybe after a few months, if you feel a little bit more confident, then you just yeah, slowly buy in a little bit more after that.
mm. Okay. Right now, maybe just one which just came out from my mind. Are you looking at any one or two stocks right now, which are waiting to actually pull the trigger to buy?
Ah, okay. Actually, it's from your watch list, but can I share it?
Yeah, sure. Go ahead. Go ahead. Go ahead. Go ahead.
Yeah, I think I talk about healthcare, right?
Mm,
So I think you also mentioned it lah when you were sharing with us. I think Novo Nordisk is a
mm,
very interesting name. Yeah. So I think they are in the space. Of course, I haven't read like the full research, but I know like they're in the diabetics like area, and they have like some of the drugs there. And I was just looking at the price, and just trying to see like yeah, how it has been trending. And I just feel like it's sort of just yeah, it's doesn't really make any sense to to be at this multiple. So yeah, that is something that I'm potentially looking out for.
mm. Thank you very much. So Novo Nordisk is one idea I'm looking at. Now, we have sort of come to the end of the fireside chat. I would like to open up the conversation and the chat to everyone. So I have a list of questions here. If you have any questions for Samuel, feel free to just type it in the question and answer chat box, and then we'll go through all the questions as much as possible. I see there are a lot of questions coming in. Um, for those who have also just joined as well, this will be recorded and I will publish it after tonight as well. So if you've missed it earlier on, so do not worry. You can always feel free to actually check out the recordings. So maybe just one question here. Let me just check. Okay. So one question is an anonymous attendee. How do you stagger your buy-ins when you buy when you buy into a stock or when you buy
Mm,
into your portfolio?
okay. So okay, how to stagger, right? So I guess for me, I think I just tell myself, let's say for every stock that I want to buy, I think there is a limit also. So again, this is not a magic formula or anything, but I try not to limit my exposure to any one stock, maybe more than 8 to 10%. Yeah,
Mm,
so I think that's the first rule of thumb. Then of course the next thing is you look at the current situation, you look at whether the valuations make sense. And usually I will let's say if I want to build a position in a stock, I typically probably will split it into 2 to 3 tranches.
Mm,
And yeah, I will only probably go in when I think like, okay, the valuations make more sense, like either fair or maybe slightly undervalued. Yeah, but I usually won't enter like a full position lah, because I mean you never know, right, how the market can just go up and down. So usually it's yeah, that's how I do it. So if let's say, you're able to do that over time, and the position is quite full already, then I'll just leave it there lah. I won't really add more to it. But sometimes I say, okay, if you build you buy in a little bit and then, oh, maybe the market goes up, right? I think it's okay. I think what I've realized in the last 2 years is there will always be opportunities, right, to buy in at some point in time. Sometimes you just need to be patient. So sometimes if I just have like a 1% in the portfolio, but oh, I sort of miss adding more, then it's fine lah. I mean, I just tell myself, yeah, it's okay. I can deploy to other opportunities which are maybe currently a little bit more attractive.
mm. What do you look out for when you're choosing a dividend stock?
Mm. So I think for dividend stocks, definitely one thing is you really want to look at the track record of the company. And I think it's especially important to look at how they perform in market crisis, right? Because you want to see whether are they still able to payout. Okay, so they may have a reduced payout. Let's say you look at the 3 local banks, right, in
Mm,
Singapore. They had a reduced payout. Actually, that was also more because MAS required them to reduce their payout. Not that they couldn't, but eventually they recovered. And yeah, subsequently I think the payouts were higher. So I think you want to study how the company actually performs in the past crisis, because that will give you some indication of whether are they able to resume the payouts. Because I think as a dividend investor, I think you are concerned that I mean, one of the concerns is that you want the company to be able to thrive even like in a crisis, and able to bounce back after that and like resume their payouts.
mm,
Yeah, so I think that's something that is like important to look out for.
mm. I have a question from Casey. Casey asks, can you share the rough magnitude of your portfolio, so the size of a portfolio, just to get a sense of progress and achievement? I mean, since you have mentioned that you've only started since 2022.
Mm,
So that's the first question. And the second question, I think earlier on, Samuel has already answered, what's the reason for the sabbatical and how long do you plan to go back to the workforce?
okay. Yeah, okay. So the first question, maybe I just share. I think size of portfolio with the fluctuations probably around 120,000 currently. Yeah, plus minus. Yeah. So how long will I decide to go back to the workforce? Okay, that's interesting, because I think at this point in time I don't have a definite answer for you. Um, I initially planned to take maybe a 6 month kind of break. So I started my break this year. So I actually plan to do a 6 months. But at this point in time, I'm not too sure also, because I think there are also certain kind of like side opportunities coming in, and I still want to give myself the chance to try them out.
Mm.
So yeah, it may extend a little bit longer than that. So I don't have a answer at this point in time. Mm.
Okay. I have a question from Ryan. Ryan asks, is there an end goal for your dividend portfolio? And what's the target annual return you would like to achieve?
Mm. I think for my dividend portfolio, right, the end goal would be to probably have a sizable kind of passive income, such that I think it will allow me to like either take on like part-time work like continuously, or just work that maybe I like to do a little bit more but may not necessarily pay as much.
Mm.
So I think that is the goal of the portfolio. I think just to have to be able to buy that optionality, yeah, to have the option, to see what kind of work to do. And sorry, what was the second question?
The second question was, what is your target return would you like to achieve?
Okay. Okay, so target return, I think for dividend yield, about 5%, right? So not like aiming for like a lot because I think it's good to be consistent. Capital growth also another 4 to 5% probably. I think
Mm.
that will be something that is conservatively can be achieved for the long haul, because I think you want to aim for something that is achievable, and then you keep replicating it. So yeah, instead of trying to go for something that is, maybe one year you can have a lot of returns, but subsequently, if you can't sustain that, then I feel like that's not the way to go as well. So I think for mine, it wouldn't be like the huge explosive kind of growth, but I think what I'm aiming for is the reliability and the consistency of the returns.
I have a question on robo advisors like Endowus and Scythe. What do you think of them?
Oh, I personally use Endowus. So I use their flagship portfolio for my CPF OA. So I invest a sum of money there also. What do I think of them? I think they are a good way to get started. Yeah, and if you want to be very fast free, you can pick something that you like. I think the flagship is fine. Don't have to make too many decisions. I've been invested in their flagship for a number of years, and yeah, I think so far it's probably giving me 5-6% annualized return, which yeah, I mean I'm okay with that. So yeah, Scythe I have not tried it, so yeah, I can't really comment.
Hmm. Okay, I have a question from Sarah. Sarah asked if one has $500 extra every month, one has $10,000 extra cash saving, how would you allocate it for both newbies? Right. So I think there are two different two different investing amount. One five
Hmm.
hundred dollars every month, one $10,000 every month. How would you allocate it to both newbies to dividend investing strategy? And what would you say to people who are starting out who don't have much? Will they always be left behind?
Hmm. So sorry, the first one is what, $500 every month
Yeah.
to invest?
So one is $500 every month to invest. One is $10,000
Lump sum, is
every
it?
month. Yes. So how would you allocate this amount when it comes to dividend investing?
Yeah, okay. So I guess if $500, then of course you have to first ask yourself, like, you are okay to, park this $500 aside for the
Mm,
next 10, 15 years, right? I think that's the baseline. Then of course from there, you can look at what kind of dividend stocks do you want to go into, right? Whether is it Singapore, maybe is it $500, yeah, you probably can't buy the banks unless, I don't know whether there's any brokerage that can do fractional shares, but you can't buy, like, because you need 100 shares, so you can't do that. But you can probably look at some of the REITs still, right? You can probably buy some of the REITs, maybe 100, 200 shares of some of the REITs. So that could be something to consider.
mm,
If you have a lump sum of 10K, I think it really depends. Of course, the research shows that if you do a lump sum versus DCA over a long haul, yeah, the lump sum generally does better, right? But sometimes you may want to split it up because it helps psychologically, right?
mm.
Let's say if you buy in, then the market drops, then at least you have more money to put in. So I think it's hard to answer this question without knowing, like, how comfortable you are to buy in. And let's say if you are okay, if you buy in the lump sum and the market drops tomorrow, are you okay with that? So I think, yeah, probably need a little bit more information. Yeah.
So this is very interesting. I got one question here for stocks whereby the price has gone down more than 50%. Would you advise to sell off or continue keeping? So maybe just to to to, to tweak the question a bit, do you have like stocks in a portfolio which is down, like 40 or 50%? And what is your take on such a stock like this? Would you actually sell off or would you just continue keeping? And what's your rationale?
Hmm. Yeah. So I think last time, of course, I used to have, right? I think I shared when I ran a very concentrated
Concentrated portfolio.
portfolio. Yeah. Okay, so personally, I feel like if the stock is down 50%, and I think there are a few things you need to ask yourself. So of course, first is, I think, when you first bought in, right? Do you feel like the valuations made sense? Yeah, so I think that's one. Of course, if in a severe market crash, definitely, I think even if you bought in at a reasonable price, then yeah, I think probably the stock might go down quite a lot. But I think just now I was also sharing that for dividend stocks, right, that is very interesting because usually there's a floor price, right? Yeah, because if you think about it, if you bought in at, I don't know, let's say a 5% yield, right? And then let's say the price goes down 50%, then of course the yield becomes 10%. So I think you have to ask yourself whether is there really something fundamentally wrong with the company, or yeah, how come it can yield like such a high yield? So I don't really have a straightforward answer to that because I think it depends on number one, the type of stock, and
Mm.
number two, you need to ask yourself whether, fundamentally, do you feel like it is yeah, has the stock really like worsened? But maybe what I could offer, right, is this thing that sort of helped me in terms of diversification, right? So I realized when you diversify, right, you also um help yourself to, let's say, if you know that this, because I had instances where I already know like, okay, the stock is down by a lot, it's not gonna recover, but it's still very difficult, right, to realize the loss, because I think humans, we are very averse to loss, right? So it's hard to realize the loss. But if you run a diversified portfolio, right, and let's say, you probably size most of your positions 3-4%. If let's say it's down 50%, right, it means that maybe you are losing 2 to 3% of your entire portfolio value. So if you look at that as a whole, right, I feel like it's easier to cut loss because you're just cutting
Mm.
away 2 to 3%. Yeah, so I feel like that's another benefit of, having a very diversified portfolio, because when it comes to psychology, and if you know that it's really time to sell, but it's difficult, but you know that you're just going to cut off 2 to 3%, and you, at least you take back a bit of capital and redeploy. I feel like that helps you a little bit more.
Mm.
Yeah.
So it's really about, when you have diversification, is not like you have, let's say, 20% or even 30% of your money into one or two stocks. But rather, right now, with a diversified portfolio, maybe it's about 3% to about 5% of your portfolio. And when you decide to cut loss this some of these stocks, it's not as painful. And
Yeah.
psychologically, it's much more, you feel more, it's easier to accept the losses because it doesn't feel like it's a big amount, even though the percentage drop is big, right? Sometimes it
I
could be
agree.
40, 50% down, but the absolute amount compared to your overall portfolio, it's not really that big because you have sort of diversified that portfolio.
Yep, that's right.
I have one question here. Would you now shift to a more defensive stock due to the tariff? And would you allocate less to China or Hong Kong? I mean, since the trade war is starting to it's already targeting China and Hong Kong stocks.
So would I shift to a more
Defense.
defensive portfolio? I guess the short answer is no, because I think the time to rebalance is always before, right, the crisis, right? So yeah, I mean, when the crisis has started and then price has fallen, you generally do not want to start like rebalancing, because you may not be selling at very good prices. So I think that's my short answer. Okay, regarding China, Hong Kong, personally, I think I'm still looking and monitoring the situation. Yeah, I have no like definite answer, but I think my exposure to China, Hong Kong is probably less than 20%. So I'm not overly concerned lah at this point in time.
Mm.
Yeah.
Um, yeah, I have a question. Um, okay. Casey asked, REITs were not as badly hammered from the Trump tariffs over the past 2 weeks. And I think you also noted, like earlier on, you noted that about 40% of your portfolio is in REITs. Could that also be the reason for the lower drawdown in this portfolio, which you had earlier shared?
Yeah, I think it's possible. I think it's possible. I mean, I didn't plan it that way, but yeah, it is definitely possible. I think because the REITs were not as hammered, so I guess that sort of even out the drawdown.
Mm. I have a question on withholding tax. So US stocks are subjected to 30% withholding tax. For your
Mm.
US portion, do you invest in Irish domiciled ETFs or funds for tax advantage purposes?
Okay, so short answer is no. Yeah, you probably could do that. So at this point in time, I guess I'm not too concerned about the 30% withholding tax, because I feel like for even the dividend stocks in US, if you look at a lot of them, right, if they have like a good track record, right, it
Mm,
means that your year-on-year dividend growth, right, can still be anywhere, let's say between 3 to 7%, for example, right? So I think that still comfortably beats inflation. So I'm actually not too worried about the withholding tax. Yeah, but of course, if you want to really optimize it, I suppose you could definitely explore lah. Yeah, so I mean, really, if you know of like any kind of like, I don't know, because I'm not too familiar with this domicile area as well.
okay, I have a question here. Should we accumulate stocks which give a bonus, or just keep investing in steady stocks, ETFs or REITs? So that means um, having a chance to grow the number of units from these stocks which you receive. So that means I think the question is more on investing in stocks which give you script dividends. So would you invest for cash, collecting the dividends as cash, or would you actually collect it as a script dividend? That means, let's say, your bonus issues.
I think that depends, right? So I guess if you need the cash flow, then you
Mhm.
take the cash. Yeah. But if let's say you feel like at this point in time, the scrip dividend, they are able to offer the unit holders at an attractive price, and maybe you haven't fully built your position, then yeah, I mean, you could definitely consider. So I guess it really depends on yeah, what is your intent at that point in time, and of course the market price versus the price that they're offering as well.
Mm. Okay. Right. Maybe just one more question. I think we have answered most of the questions. Maybe just one more question before we end our chat here. Uh, Overall, Samuel, like for your current dividend portfolio, roughly what's the current yield which which you have for your portfolio now?
The overall yield, is it?
Mm.
Yeah, so I use like Stocks Cafe, which is this like tracking like there's a platform to help me track. So I think it's probably yielding close to 5%, like overall on a blended portfolio basis. Yeah, so probably 4.9 to 5%.
Okay. All right. Thank you very much. Guys, if you have any more questions, feel free to drop me an email, or you can always reach out to Samuel. You can reach out. Let me just quickly share
You
this.
can DM me on
Yeah,
Instagram.
you
I
can
will
DM him
try
on.
my best to answer any other questions. Yeah.
Yep. Just share the slides here. Right, so you can reach out to him on Financial Pilgrim on IG. If you have any more questions on his career journey, if you want to take a break, go on a sabbatical, and you are curious on how he actually made this transition to move from having a concentrated growth portfolio, which he shared earlier, to a six figures dividend portfolio, which is building now and also growing his passive income, feel free to reach out to him. With that, I've come to the end of our fireside chat. Now, just a side note, this week I'm also launching my Build Your Monster Dividend Portfolio online course. So this will be an on-demand lifetime access course, which I have carefully prepared for those who are interested. Especially, you might not have the time to attend some of my live webinars. So this will be something very useful if you want to get started investing. Get your feet wet investing, but you're not really sure how to go about doing it. This course will be, this will be something which is interesting for you. So do check it out. I just quickly just share with you the information here. Right. So right now, we have our Build a Monster Dividend portfolio. It's open for enrollment, and basically, it's you get full access to the modules which are all pre-recorded. I do also have a Singapore REITs masterclass, how to invest in Singapore banks. I have checklists and tools. And what's interesting is for this online course, there will be future upgrades to it. More important also, I'm also going to have a live training workshop and a Q&A. So current, past BYMDP students who have actually enrolled previously, you guys also will get this invite as well to this live training. So I will, share more on the case studies and also the Q&A as well. So if you enroll now, this is the offer for today. It's 397, and I'm opening up the enrollment for this week. So do feel free to go and check it out if you are interested. With that, I've come to the end of our fire chat. I hope you guys have enjoyed yourself and the conversation which I have with Samuel. If you have any further questions, feel free to reach out to him on IG. Thank you so much for this evening, and I'll see everyone soon.
Thank you, everyone.
Thank you. Thank you. Yes. So Kelvin asked about the Skills Future credit. So currently, there's no Skills Future credit for the online course. Yes. Thank you very much, Daniel. Very appreciative. Okay, the link. Post the link. So, which link are you talking about? Okay, maybe I'll just share. I will share Samuel's IG link if you are interested. This is the one. Do make sure to check out his blog. If you're interested in getting the Build a Monster Dividend Portfolio online course, this is the QR code, so feel free to check it out as well. All right. And okay. So thank you, everyone. Yes, thank you, Sarah. It's been a great session tonight, and I will see everyone soon.